Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. Got Greg Machinery Pete Peterson to talk about what's happening in the marketplace. Greg, how you doing today?
I'm doing well. How about you, Casey? As we
Doing good.
Up to Thanksgiving here, you got the turkey all set. You're gonna cook up. What do you put it on a grill, or do you guys deep fry it? How do you, or maybe your ham? I don't know.
No, so when it comes to anything like this, I get told to stay in my lane by my wife, and she takes care of all the stuff like that. I'm a big do the splatch thing with the turkey and lay it down and cook it out, but
stay clear.
There's I get a pretty good nod of the head that there's things that you can do and there's things that I can do, and you don't get to do this one. So.
Well, you're willing to help. You're willing to.
Yeah.
I give you bonus points for that. That's awesome.
As long as we can grill it, I'm willing to help. That's kind of that's my jam right there.
Okay, so I'll probably bring out my Machinery Pete annual Thanksgiving poll here. Be curious so you get first vote.
Okay.
So if it's apple, pumpkin, pecan, or fill in the blank, any other, what for Thanksgiving pie? What's Casey Seymour's choice?
That's a tough one. You know,
you got to pick one slice. What do you get?
So I grew up with a grandmother that was from North Carolina, and she could make some things that were really, really awesome. Most things were really, really awesome. And I remember her pecan pie is one of those ones that always stands out there. But she made a good pumpkin pie too. But the pecan pie with her homemade whipped cream on top, I can't think of anything better than that. So I'm going to go with Grandma Jane's pecan pie.
Okay, well, that's interesting because I haven't been surprised. I think pecan pie, and how do you say it? Is it pecan or is it? What's the right
pecan.
way? Pecan. Okay.
I'm a pecan guy. Yeah.
Okay, so I'm showing my non-pecanness here. I'm a northern Minnesota boy, but I grew up on pumpkin and apple. But when I do this annual poll, pecan is always like right up there. But usually apple is one, and then pumpkin and pecan are kind of tied. I vote pumpkin is sort of mine. I don't know if that is a commentary on Machinery Pete blandness, my Minnesota palate. I don't know, but if a piece of pumpkin pie at Thanksgiving, and all is right with the world, man.
Right. But I'm also one of those too that, hey, there's 5 pies. Why not just get a little bit of everything? And
that is wise. Yes.
Everybody wins.
Yes.
You know what I mean?
Yeah, exactly.
And, Thanksgiving also is my favorite holiday because there's like zero expectation for this holiday, right? There's no cards or gifts or anything. Maybe if you're going to someone's house, you might bring a bottle of wine or something like that. But this is kind of one of those deals where you get the event of the entire day is the turkey or ham or whatever it is that you're enjoying.
Yep.
And the amount of time that you get to sit on the couch, watch TV,
watch some football with people. Yeah, I
I
agree. Thanksgiving is hard to beat.
More holidays should be like Thanksgiving, where it's just about to hang, right? It's not about anything else, right?
Yep. Hang out, watch some,
what I like about it.
Eat and watch football, and have that second, maybe even that third slice of pie.
Yeah, you have time. You have nothing but time there, and you have the recirculation of turkey throughout the remainder of the week is also one of my favorite things as well.
So good.
Yep, truly an American holiday in every sense, right?
Yeah.
Yeah. All right. So speaking of stuff going on, there's quite a bit of stuff happening here. You sent through a couple different auctions that you watched over this last week, and there was some good takeaways there. So, Greg, as you're looking at those, what are you seeing?
Oh, I tell you what, Casey, end of last week, November 20th through the 22nd, Thursday through Saturday, just astounding sale pricing around the country particularly on good condition used equipment with a bit of age on it. Now, just that 10-year-old mark drifting into the pre-def stuff. But I tell you what, I was on the radio this morning with Chip Flory, AgriTalk, and he always says, well, what's your pick of the week? And it was really hard this week. But if you press me, I would have to go with that John Deere 7410 two-wheel drive that sold, I think it was Saturday in Berea, Kentucky. And it was low hours, 1,091 hours on it, no loader. The thing the hammer price was 156, and then you got to tack on a 10% buyer's fee. It was 171.6.
Yeah.
Now, I've seen a ton of John Deere 7410s. The previous high was 139 a little over 2 years ago on an auction in Harrisonville, Missouri. But that was a mechanical front with a loader and like 1,612 hours on it at 139. And given where we are with the market, of course, the livestock hay is red hot and has been. But so that was amazing. That was Saturday. But I think I do have to write a column for Farm Journal about last Thursday, November 20th, because around the horn, it was unbelievable. So let's start up in Ontario. Our friends Mike Shackleton with Shackleton Auctions up there had a sale in, I think it's Kamlachie or Kamlachie, Ontario. And what got my eye, Casey, was the 2013 John Deere 8235R. 2,999 hours on it. Now, Canadian, it brought 287, which conversion rate is about just under 71%. U.S. So U.S. it was $203,678 for a 12-year-old 8235R. And when you look at our data, I mean, that is the highest auction price ever on an 8235R with over 1,250 hours on it, and it's the fourth highest ever. So that same sale on the combine side. Now, we've talked a lot the last couple months how, yes, maybe the 1 and 2 year old ones, still quite a bit of depreciation there, which we get, but they had a 14 model S670 with 1,945 engine hours on it with no heads. And it sold for 235,000 Canadian, which is 166,000, just under 166.8 US for a 11-year-old S670. And when I look in our Machinery Pete auction data, that 166,775, that's a third highest ever on a S670 with over 1,900 engine hours and the highest in 4 years. So once we clicked into November here, good condition used stuff with just that little bit of age on it has been going up. And that same day, last Thursday, I happened to be in Benton, Iowa, kind of in the southwest part of the state. We were covering an auction by Younger Auction Company for Wheeler Farms Retirement. A great line of John Deere tractors, but right on the end of it, he had one red tractor, a Maxxum, a Case IH Maxxum 150 with a loader. And I think it had 1,050 hours on it, and it brought 135, which is the all-time record high auction price on a Maxxum 150. So just a couple of examples around the horn, and it, like I say, the last few days have just been, the dollars are flowing.
Yeah, so we've been talking about this a little bit too on here. Aaron Fennell and I have talked a little bit about some of the stuff too, that some of the stuff that we see driving the market like we're talking about too is a lot of pre-def stuff on the market right now. A lot of really good stuff like you talked about here. That's some lower average stuff, that some really one-off stuff that if you do see something like that and then you're in the market for something like that, you need to buy it because it's like these just don't pop up all the time. But as you walk through this, there's a lot of, I'm kind of waiting to see what happened with crops and those kind of things and where I ended up at, because there's some stuff that I kind of needed to do, not necessarily that I wanted to do. And I think you're seeing some of that kind of bleed through. Not a bunch of 1 and 2 year old stuff. I'm not talking about those kind of things, but we're talking about more of of that buyer that's in that 3 to 7 year old kind of range. We're seeing a lot of movement in that range, and I think kind of what you're talking about here is showing some of that kind of that range of stuff being bought and sold right now.
Yeah, it was interesting at the Benton, Iowa sale Thursday, and I just posted the YouTube video of some of the highlights yesterday on our Machinery Pete channel. But so it was interesting. The line of tractors, Casey, it had the Maxxum up front, which sold a 135 record, and then there was a John Deere forklift that sold really well. Next to it was a 1971 4620, which muscle tractor, 31,000. That had them going. And then next to it was an 08 8130 Deere with 3,782 hours. Again, pre-def. That thing goes 127.5. But the crowd, it was a big crowd. And on those items, those older items, you could feel it and sense it. The people were jamming in around the items, and bids were flying, prices were strong. And then we went down the line, and they had a nice 8335R that did 185, very nice. They had a 13 model 8360R, 165. Again, people crowding in. The last tractor in the line was a 16 model 9520 RX with a little higher hours.
Okay.
It had 2,582 hours on it. Now, the truck moved down, younger auction company, truck moves in front, but the people, instead of jamming around like on the Maxxum and the 8130 and the 4620, now the people backed up. And so I'm filming. I had to back up with my camera to, there were people there, but I just had to back up. Now, the 9520 RX sold for $230, which people at the auction were coming up to me like, oh my God, Machinery Pete, that's like crazy soft, right? And I was like, well, not really, because, how many hours? Almost 2,600 hours. But to me, physically, what people were doing there represented to me buying heat, which is what our numbers have been showing on this 10-plus-year-old stuff, maybe in that price range, like you and I have talked about, which now might be 150 or under. If you drift over that and it's not the right item, if it's whatever, too many hours, whatever, not equipped right, then you got apples and oranges.
Yeah. Yeah. And that's, the same thing so that's something too that we kind of picked on a little bit last week, but I think we probably should dive into a little deeper just because of what you're talking about here. But when you're looking at a 9620 RX, 16 model, 620 horsepower, right? 230 to me at a 16 model, would you say 2,900 hours?
2582 on a 9520 RX. Yep.
2,600 hours. So really, for the year, it's not a ton of hours, right? And so it's weird. The thing about machines like that is they're very niched, right? And you got to have the belt. It's because you get a 620 horsepower tractor, doesn't necessarily mean you get to pull stuff faster. You got to have the right implements and those kind of things that go along with it. So there's some of that played in that. I am anxiously watching that 620 to 640 horsepower tractor range, just for the simple fact of you've got on the other side, if you're a Case guy or a John Deere guy, you got some 700 plus horsepower tractors on the backside of that show that can open the door to some efficiencies that you may or may not have been taken advantage of just because of implement size, grain cart size. I mean, there's all kinds of things that come into play when you start looking at that planer speed and those kind of things, right? So as you're looking at those things, watching those tractors right now, I'm anxiously kind of watching those machines as they go through right now, this period now into next year, which I think will paint a picture of where that's going to go. And I did this when the RX and Quad Track and those kind of came out as all those machines started coming together. And the reason for that was I really thought that the 2-track tractor was going to be, for as many people that didn't like a 2-track tractor but wanted to go to a track-based system with their tractors, that when the RX came out and then you had the Quad Track, the Case Quad Track that came out, and then they'd been out for a while. But I mean, when those two things kind of now were head to head with each other, the price differentiation was going to drive people more towards a 2-track machine, and I was way wrong on that. The 2-track machine actually kind of got pushed off the table even more than it kind of already had going down that, to where it kind of got niched into a very select group of farming practices and parts of the world. So watching those two things happen, now I'm kind of anxious to see what happens with this and how do those two machines, how those subsets now start to play into each other, because it will have an effect, right? When those two were these are the biggest of the bigs that you can get right now, those two machines now are going to, or that series of machines now does have some direct competition based around horsepower that you're going to see from some of this bigger stuff. So it's going to be interesting to watch how it affects this, like I said, 590 to 640 range tractor.
Yeah, for sure. I agree. And in fact, if you're on the topic of watching to monitor things, there's a particular sale Saturday, the day or 2 days after Thanksgiving, in New Bloomington, Ohio. It's a farm auction. It's Maddox Farms. Brad Maddox, I was actually out on his farm a couple weeks ago doing a preview video. Sales by Higgins Realty and Auction. If you want to check it out, folks, it's higginsauctions.com. But he's got 5 24 model 9RX 540s, and the hour range are like 109 to 383. And then he's got a 24 model 9RX 640. Brad, besides his farming operation, also had a large fertilizer business. So obviously that's sort of why he had all that horsepower. But selling 5 of them or 6 9RXs on one farm auction. Again, November 29th, that'll be quite a test of the market there. Low hour. He's also got a 24 model X9 1000 tracks, 330 SEP hours on it. So yeah, there's always a sale coming around testing the market. I know Ritchie Brothers has a big sale in Ontario on Wednesday this week. Tons of late model tractors. So, but like you say, that model series that maybe just got nudged or passed by, how big is the drop there quicker? And that's, again, what I honestly love about the auction side of things is it just cuts out all the BS.
Yeah.
And then people pay what they pay. They're just judging, and we're keeping track. And hopefully the data can help you as you're trying to make decision, folks. But you should, like you said, Casey, keep your eye open, because sometimes when things fall enough, you weren't considering that horsepower. But if I can get it for that, look at what we were just talking about. You had a 9RX or a 9520 RX 16 model go for $230 on the 2 days apart from a 7410 with low hours, granted, going for 171.6 in Kentucky. So You're talking about not even $60K difference. So it's an amazing market to follow.
Yep, for sure. Yep, for sure. And I think you see some stuff here where you can have a great opportunity to, like you said, do some retooling if you wanted to do some stuff, and you're going to see some opportunities. And it's going to be interesting to watch how this plays out, and we go from there. So, as we're coming into December here, we're almost to December. I can't believe it's already Thanksgiving. But as you look at where we're at for December, this truly is, December is the hottest month of the year for sales, right? Obviously you got a lot of guys that are looking at different stuff to do different things to get one more thing in this calendar year to push things out. As you watch things move along, as you're looking at auction inventory out there, Greg, looking at past Decembers and in your history of doing this, how do you feel like this December's stacking up?
It's going to be strong. Honestly, November to me has become the month over the last, I suppose you could track it back to 2007, 2008, that last upturn. But I tell people if I were having my own auction, I would probably shoot for like this past week, week before. But really it's sort of November 10th right through about December 20th is really optimal. So, and every time I've seen the first half of November take off and be strong, I've never seen December peter out. And what I didn't know this year was the fact that last year in 24 was only the second time I'd ever seen November and December collectively used values drop. The first time was 15, second time was last year. But this year we've had such a drop off in the raw number of, basically dealers, cooling it in terms of, the 1, 2, 3-year-old stuff they're putting out to auction. It's the market solidified early on, and now there's no question to me that in November it's picking up speed. So I think December is going to be a good month to be a seller. And then when the calendar flips, and we have all these different factors. You're talking to commodity experts all the time and people on the dealer side, and everyone's trying to figure out, where farmer mindset is. But to me, farmer mindset, when it comes to equipment, you just got to watch the auction market. When some dude pays 171.6 and the same day on that 7410, and then we see that 6420 go for 75.5, and up in Ontario that 8235R goes for 203.7. They want to find that good condition used stuff with just a little age on it, and I don't think that force is we'll hit a switch and go, well that's done.
Right.
Because I'm not seeing that the sales of new are going to project it to be spiking higher anytime soon. So I think we're just in this condition where, and this gets interesting for me from a dealer standpoint, because you're looking at your inventory and you're watching this stuff start to go up, and I know who would have predicted it. 6-9 months ago. So, you're still trying to manage your inventory down, but I don't know. It's hard to look out ahead 1 or 2 or 3 years trying to figure out, how's our used inventory going to be at the end of 26 into 27? I don't know. It's a fascinating time.
Yeah. The thing what I love most about following these markets, right? The retail market, auction market, those kind of things, is the length and time in translation that you see these things. So when you start seeing auction values stabilize or start to creep up a little bit or something like that, that's not an immediate translation over to the retail side. It seems like there's you see the prices out there, and they still get. It's just they don't move fast, right? So you're starting to see some things kind of tick away and move along. In my experience, it's always been once you see the auction market stabilize and you see things start to kind of move in a certain direction, it's usually 3 to 6 months before you start to see that be really translated onto the retail side. And that's for whatever reason, I don't know why that is, because it's the same way on the other side. When the market starts to fall, it's 3 to 6 months before the retail side comes back in. And I think a lot of that has to do, Greg, with the length of time and transaction period that we see. You order something new today, it gets here in 3 to 6 months. That trading comes in, that trading gets priced a certain way, and it's not at the time of delivery that you make the trade value, right? It's when you're making that deal 3, 6, 9 months beforehand. And I think that's why it takes that long for things to kind of wash through before you really see things kind of translation out. Like it's no different when you see the price of oil fall on the news, like, oh my God, price of oil's cheap right now, but I've been paying the same amount for my gasoline at the gas station for it. So, well, it's a contractual basis, right? They bought all that oil, that gasoline at a certain price, and now we got to sell through that before they get to this cheap stuff again. And then it's usually a few weeks before you start seeing that edge come off of the price of gasoline or whatever it is that you're looking at. Similar thing on the equipment side, right? There's that wash through cycle where you've got to see things move through, and that new pricing structure take place before they can bring it back in. And it's always been, so we watch the stuff roll through every about 3 to 6 months after you see changes on either side of the marketplace, things take through. But again, it goes back to the point you made earlier, Greg. You have to follow the auction market. And if you're not following what's going on in the auction marketplace, you're gonna hit some pitfalls, and you're gonna hit pitfalls when things fall off the table, and you're gonna miss the money to get back on the table if you're not paying attention to what's going on, because it is such an indicator of what's going on in the marketplace. And it's true and hard, fast. Hey, markets are good. Auction market climbs up, man. If the markets are bad, the auction market starts to fall. And you see that sentiment inside of what growers are thinking immediately, and not, you might chip away at it slowly over time, but you can start watching it go up or go down, totally based around what's happening in the marketplace. So like I said, when I was a used equipment guy and I was managing used equipment, the biggest things to me that were the most important were what we sold the last one for inside of our business system. We go back and look at that, what the auction price was doing, and then what stuff was listed for on the internet. To me was a positioning point, and it had really nothing to do with because I can pull up 50 different combines that are the same year, like model and hours and everything else. And there's going to be there might be a $60,000 swing between the most expensive one and the cheapest one out there.
Yeah,
and that's a lot of that has to do with when it got posted and
right,
a million other reasons why it's the way it
is. You're right, Casey, and it's the auction market. Again, to me, I've spent my life compiling the data to hopefully take the emotion out of it and hopefully identify canaries in the coal mine going up or down. Last year it was down. 2024 we fell like a rock, late model used equipment values. But what frustrates me, but I totally understand it. Like last Thursday I'm out at the auction, and again, so many people throughout the day. I was out there from 10 o'clock to 3 o'clock just talking to people, and it was a great crowd, by the way. farm retirement sale. But so many people came up to me the first half of the sale and were like, wow, Pete, these prices, this is brutal. And I get it, but wherever I go, I almost run into that. And I'm not trying to be Pollyanna or anything, but I'm looking at the numbers. So right when a guy on that sale, they had a 16 model S670 with 2,622 engine hours, one owner. And I know from talking to the auctioneer and the owners that they'd had calls from all over, from Texas, from out east on this combine. Like we talk about, people looking for nice with a little age. So it sells for 115. Okay. Now to me, that was the bar. I thought this should bring 115 based on 2, 3, 4, 5 other ones nice we've seen in the last 6 weeks. But people afterwards sold were like, oh, that's terrible. And it's like, no, that was not terrible. Hey, opinions are free and you can say and feel whatever you want, but you're kind of, excuse my language, you're kind of talking out of your ass unless you know what the data is. And so, you have to be aware of that stuff. And you can get caught in that, not realizing what a good buy could be. That's the falling knife. Oh, everything's going bad. Yeah. But, again, I think it's important to compare. So, and I haven't even brought up the other sale last Thursday. It was down the road from me in Canton, Minnesota. It was a retirement auction for Dave and Alice Turbeast. Hamilton Auction Group had the sale. And so Andrew Hamilton, auctioneer I've known for years, texts me as I'm driving home from Iowa. And I was like, Pete, whoa, were you watching our sale today? So I punch it up. They got John Deere 115 stock chopper, sold for $19,000. I've seen a lot of 115s. The highest I'd ever seen was $16K, and that brought 19. Same auction on the topic of pre-def. He had a 09 7930 Deere, 2,628 hours, no loader, 141. Fourth highest auction price ever, over 2,500 hours on a 7930. So all these things we're talking about, that was last Thursday. So ideally, if you can take all of it together and kind of chew on it and go, okay, which is what we do every week. That's why we're trying to help people with these conversations. Last year, it was falling like a rock. Now it's solidifying. Now in November, it's lifting a little bit. But again, like you said, that's all right from the front lines of the auction market. This brought this today. You don't have to like it, but that's what it brought. And you need to have your eyes open to it, whether you're a dealer, whether you're a farmer, to not pay attention to it. You're just running blind and making decisions based on, like all those people that come up to me at the sales, like, oh, this is terrible. It's like, well, it's actually not. And I feel bad for those folks if they're making financial decisions on equipment based off of guessing. Why would anyone do that? I don't get it.
Yeah. Yep. Yeah. And then you just, like I said, having a knee-jerk reaction to a sale it's bad. I mean, I get it. I've been on both sides of that, right? I've been watching and selling and got shocked by both. So, I mean, I've been on both sides of that. But it's at the end of the day, are you establishing a trend in the marketplace, right? Is that just a one-off sale that was just whatever for that particular day? It was just whatever,
right?
Or was that the day that the market started to go sideways, right? And those are the things you start to pay attention to and start developing those things, and then making your decisions long term on those as they start to move through.
It's been interesting, Casey, the number of times the month of November has moved either up, has been a lynch point for either up or down. Because you would remember the chair you sat in on the dealer side back in November of 2007.
Yeah.
When, ethanol basically took off. And we'd had the Bush tax cuts been in place since 2002 with the Section 179. There was never any fuel to it, though. Farmers didn't have any money. So when corn and beans went up November 2007, I was watching the auction market every day and was like, holy crap. These prices are coming in from all over, just sky high. So if, in a dealer, you're plugged in, it's like, well, I guess the used market is changing right now. And it happened this week. So again, it's quite often November. Last year, we went down, which I hadn't seen hardly ever. And this year it's so far trending up. So
Yeah, for sure. Yeah, this is I think, my opinion, this next 30 to 45 days are real pivotal to pay attention to. Make sure that you're understand what's going on in the marketplace, because it's going to set the stage for what's going on this spring. And,
yep.
Assuming there's not some kind of catastrophic thing that happens the first quarter of the year, but it's going to start setting that, setting the stage for what happens in early 27, which then echoes to what happens in, post-harvest stuff. And I think that's that's three big points there down first quarter and moving into that late third quarter as to what happens there. So all those things are going to make a big difference in what's going on. So
yeah, and at some point too, I mean, sales of new have been depressed, but when you see a 12-year-old 8235R with 3,000 hours on it go for almost 204, at what point as a farmer would you go, maybe I should look at new? Now, those numbers are much bigger, but, warranty, things like that. So that's the piece. We've touched on it a little bit, danced around it, but if from the dealer side, they were so aggressive last year to smash down their inventory. So now if the used values are lifting end of 25 and you're a dealer, how do you view your used? Like if we play out and sales of new don't take off for another 18 months or more, that's like our friend out in Ohio. I think I brought it up a couple weeks ago. It's a used dealer out there. He just sells used equipment.
Randall Brothers?
No, it's not. It's not Randall. We love Mark and Rob and those guys. It was Reitzel. Reitzel.
Oh, yeah.
So he made a comment on his Facebook page, and he talked about good used equipment becoming scarce. Now, what he's talking about is this, basically 10-plus-year-old to pre-def stuff that everybody wants.
Right.
But he wasn't wrong that it's starting to maybe. That's why that 8235R just brought 204 on Thursday.
Right.
So again, if you're a dealer,
and that's why I've always talked about that 10-year-old stuff when you're at the bottom of the marketplace. That's that older, really nice, above average stuff like that does sell fast, and because I think to me that's a symptom of we're at the bottom of the market, and we've have documented that for the past 3 or 4 months now on that stuff, about where that stuff's landing at.
Yeah, the trend is only becoming stronger.
Yeah, for sure. But again, back to your question on if you're a dealer and how do you use your used equipment. We'll let you know in 3 to 6 months from now, because that's about how long it's going to take for that to start to swing it around. I mean, not necessarily swing the market around where people are going to come start kicking tires a little harder than they have in the past, but it's I watched the last one sell for X and you want Y. Tell me why. And that's the conversation you start having. And it's not until you start seeing, like, the guy misses the machine he wants 3 or 4 different times before he starts coming back into the market on the retail side. And my experience has been just that. I try to buy 2 or 3 of these and I just can't seem to get one bought. So here I am.
There's one interesting thing that popped up when I was in Iowa last week. I was talking to a dealer out there at the auction, and we're talking about these 10-plus-year-old items, ringing the bell. And of course, that was before the 7410, before the 6420, all this stuff. So, as a dealer, when you get that in on trade from one of your top farm customers, and you can sell it, it's probably already spoken for. But is there an opportunity when you take that in on trade? Like, you got to almost be careful, like, don't sell it for too little, but almost use it as particularly for social media, to throw that out there for, we just took this in on trade, and just drag people to your website, and then they might find a field cultivator, a skid steer, whatever. But these things are just beacons. You can see what people are paying for them. So if I were on the dealer side, I would, even though you can already have it sold, maybe take a breath and utilize it to drag people to your site, and maybe you'll move another piece off of that. That's how powerful these good condition, slightly older items are.
I used to do that, not necessarily on the social media stuff, but hey, this is whatever. premium piece come through, hey, just right in, just got sold. But if you're interested in something like this, I've got this one over here that's
Yes.
close. It's close to the same.
Well, that's why nothing got by you back in the day when you were in that chair, Casey. That's why you started this podcast and helping people out. But yeah, it'll be a real interesting end to 25, no doubt.
Plenty of things got by me, Greg. That's why I started this podcast, so people could show me what they did when these situations popped up.
You're being Scottsbluff, Nebraska humble there. I don't think much got by you, my friend. But no, well, the point is the market's moving. So whether it's a mindset, whether you're a farmer or dealer, you have to be nimble enough to go, oh, well, it's not what it was a month ago. It's just so easy as humans to go, well, this is the way it is. And I mean, that's my dad was a dealer, third generation. And that's why he taught me the value of this data 36 years ago. There's something here because you're putting concrete evidence to movement in a market up or down. And that's important. And the people who pay attention to it win. The people who don't pay attention to it, they lose on deals. So be a winner, not a loser.
Always helps.
Yes.
Always helps. All right, Greg, good place to stop. Folks want to reach out to you, get you to come to a speaking event or out to an auction, something like that. Best place to hit you up on social media or machinerypete.com.
Yep. Drop me a note on Twitter, on X, or just go to our website, our toll-free number there. Get a call into our office. And I hope to see people. I'll be out December 5th. I will be at a Bussey Brothers auction out in Ohio, a great farm auction, and then catching a flight down to Virginia the next day. Jason Aycock Auctioneering has a fantastic farm auction in Southern Virginia. So next couple outings. But I hope everyone has a great Thanksgiving and watch for that Machinery Pete apple, pumpkin, or pecan pie poll coming. It's coming soon.
All right. Right on. Well, Greg, appreciate you being on the podcast. We'll catch you again next week.
Sounds great, Casey. Take care.
Thanks. Stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast Markets. I got Rich Possum back on to talk about what's happening in the overall economy. Rich, how you doing today?
Good, thank you.
Doing good, man. Real good to hear from you, Rich. Talk a little bit about your podcast, where people can find that, and we'll dive into some of this economic stuff you've been working on.
Yeah, on the internet, go to criticalpointpod.com. There's a bunch of explanation there and the usual advertisement you can expect from any analyst. There's some free stuff, but I've gone the other way. The norm for the industry is give everybody a 2-week free trial, occasionally 4. I got a 60-day free trial, cancel anytime you want. Give it a chance. I think you're going to want to stick for the rest of this decade because we got some wild, crazy stuff yet to come there. Yeah. And hopefully we make money even on the bad times, okay? But at least want to protect ourselves from the bad times. Yep. But go to criticalpointpod.com. I think you'll find everything you need there. And if you want to email me, rich@ag-financial.com. Send me a question. You don't agree with me. Send me some actual facts. I want to learn too, okay?
Right on. Well, check that out. Rich has got those out there. And like I said, that's the stuff he has out there. It's quick hitters. And that's the nice thing about what you're doing, Rich. It's not some big 2.5 hour long deal. It's, quick 5, 8, 7, 15-minute long stuff that kind of fills in on just that, the here and now, what's happening with that. And, Rich, speaking of that, you take a look at what happened earlier this week with the stock market. You really saw some fireworks there, I guess. So talk a little bit about that reversal that we saw that went from great one day, bad the next, and it wasn't just on a few sides of the market. It was the kind of the whole, all spectrums of the market as a whole.
Yeah, good point on that. The breadth, which means how many different types of stocks are they buying? How many different? That has been deteriorating since June, and I've been bearish for the month of November, or at least some of it. I started to give up on some of my downside targets, and then lo and behold, it's just like they just walked in overnight and just gave up. okay, selling across the board. Some of this has to do with AI, and even Goldman Sachs, their trading desk, said earlier this week it was kind of scary that their desk was rather quiet, and yet the market was dropping anyways, And they said it's scary that NVIDIA comes out with these great numbers again, selling all this AI stuff, and the market then immediately sold NVIDIA, okay? And here they had a great report. So that's scaring everybody. The mentality's changing, that even if things are good, the stock market is just way ahead of itself. Pull it back. But I think there's people getting nervous. There's just all this negative news that seems so slow in developing. They're getting nervous. It will get there eventually, that they can be right on forecast. Those two things combined, and they just stepped in and sold. And the problem is the demand dropped just as quickly or more, or faster probably, than the supply sell side picked up. Therefore, the supply side then got scared that they just had to lower their price at a faster pace than normal. And the market just kind of went through a little miniature meltdown here. And with that, NVIDIA, it was amazing. The stock market was up, over 100 points when we went in the next day after the NVIDIA came all the way down to close down on 100 points. So a 200 and some point move in the S&P 500. That's huge. And all in one day, within 45 minutes, most of that entire drop occurred. So it was just melt down. And when that happens, the demand was backing away too. It said, I don't want to buy anything. Meanwhile, the seller's saying, well, wait a minute, I want to sell.
Right.
So very interesting structure there. Doesn't surprise me in terms of the direction and the timing of it. Surprises me a little bit now in the weakness, even though I actually wanted it to drop this much. As I say, going into it, it looked like they just did not want to sell. And then just overnight, boom, sell it, I think we're going to get a bounce in December, and I won't give any more detail on that because there's a lot of tricky things going to go right or wrong with that. And I'll save it for my members. But I think in the first quarter, I think we got some other problems coming. But all of this could still mean we're in a bull market. But I got to tell you, I'm seeing things I haven't seen in 30 or 40 years. In my personal experience, I'm seeing things I haven't seen in 150 years in the history of the stock market. Gosh, I'm supposed to be a really strong bull for 26, 27 because that's how I planned it over the past 5-7 years. But I'm really concerned things aren't going to be that great in 26. And I tell you, by 27, I think the stock market is down 20 to 35%. It could even be a once-a-decade sell signal, which in my opinion is way too early, but it could be down 35, 60%. And the reason it can be that early is we do know under George W. Bush that most important decade-long economic boom-bust cycle was shortest, or the second shortest, meaning it did occur once before in the 1800s, but only twice that I know of that short. And there's some things saying it could be that short again. So, and now we got billionaire Ray Dalio nervous over the federal debt. He's saying, well, it might be still too early to sell, even though this market's dropping now. He just said, we're in a bubble, and this AI stuff, it's just like the 1990s and the 1920s, put everything way too high price, way too soon. And they keep telling us AI is different than the 90s or 20s because we actually got big companies buying this AI stuff. So they said it's not this fly-by-night companies that start up and then they go bankrupt. So they think this is going to last. But the problem is they put these prices so high on these stocks that I put in my newsletter here a week or so ago. I just simply said, hey, as far as I know, we've already paid for the profits for the next 10 years. So, and it was interesting. I know more get that published. 48 hours later, the stock market's taking a nosedive, and some of these AI people are saying, well, we may have overdone it,
Well, it's funny you bring that up because I was thinking about this the other day, and the company I work with here at Farm Journal, we talk about AI all the time, and every other company does too, talking about AI this, AI that. And if you wanted to go find an AI solution, I could throw a rock out my window and hit a company that does something with AI, right?
Yeah.
It feels very similar to what you're talking about coming out of the late 90s, early 2000s with the whole .com bubble thing, and because there again, there's a website for everything, right? You go do this, you go do that. You got this, online that, digital marketplaces, yada, yada, yada. And that collapsed. Not so much because people weren't using it. It was just the amount of stuff that was on the market.
The supply was high,
right?
Yeah.
And it was so high.
Yeah.
As you look at this AI thing, I think AI is I'm as scared of it as I'm excited of it, right?
Yeah, me too.
And you can tell I can sit here and tell you how excited I am about it and all the cool things you can do with it. And I also watch Terminator, so I know what that looks like too. Right? So
yes.
As you're watching this thing roll through, it starts to feel like every fifth commercial I see on TV is some company that's got some kind of AI thing.
Yeah.
Are you starting to worry a little bit about supply and what that looks like?
Not am I worried about the supply. Like I said, I think they built way too fast. I'm also concerned these data centers are building them so fast. I just saw a chart. Manufacturing was starting to go up. Building of manufacturing was starting to go up under Biden because Biden and Trump have really been on the same page. They wanted more manufacturing. It's now going down. Okay. Now I lost my train of thought in the sense, what was the next verse? Office space. That had been trying to recover after COVID. It's going down. People aren't building offices. They're not building manufacturing, or at least they're backing off, okay? The problem is you look at the data centers going like that, okay, straight up. Now, the problem with these data centers, they suck up so much electricity. And I don't know about you, but I've looked at my bill, and I'm glad we're now putting in solar for our home as well. I have solar at this office here. I put in myself, but now we had to hire somebody who was too big of a project for me. We're going all solar because these rates are going higher for years. And this data stuff, I mean, I like being a free market capitalist, but I tell you, sometimes you got to step back and say, now, wait a minute. In my opinion, those data centers, if they want that, they should pay the higher rate, not you and I. Okay.
Right. Oh, yeah.
Let them help them finance the expansion of that. And not only that, I'm against all this data anyways. I don't want my stuff out there. Okay. And this surveillance stuff is getting bad. I mean, these computers know exactly how you buy and sell. It brings me back to my days of a teenager when I told my dad and all these business buddies, they had a big conversation. We're all going to work for the government someday. And I said, no, you either work for big government or you're going to work for big business. And they laughed and said, you're probably right. Well, here we are, and big business knows more about you and I than the government does. And now the government's owned by business. So, it's like, I mean, that's the way it's going. All right. So this AI, what bothers me more is not the AI itself, but the fact AI is going to be part of the robots. Because I said in 2010s, even though I was aware of AI, even my wife for a while was a computer programmer before working on legal attorney stuff. But in the 1990s, she was really getting a neural network. She was getting into the AI in the early 1990s. And that's when NVIDIA started in 1993. I didn't realize that just the other day. Wished I bought it in 1993. But at any rate, the AI is helping this whole robot thing. And I've said for many years, since 2010s at least, that it can be a heaven on earth or a hell on earth. And it's your and my choice. And if business runs it, it's going to be a hell on earth. So you need government, and people are speaking up saying, we need some taxes. We need some regulation. I really am scared this whole robot stuff. It just put too many business people out of a job. And the AI, even though they're buying all this AI and it's not paying off for a profit, they are already laying off people. Okay. Right. And I realize you could take the history for hundreds of years, not just US, but go over to the Netherlands, 500 years. Every decade we invent something new and put some people out of a job. But somehow we invent the next new thing that puts them in a job. Right. And that can be a beauty of capitalism. But I got to tell you, every several decades, we run into a real serious problem, and we're there. Okay. Yeah. And I don't know. Yeah, I hate to be a pessimist on this because it's wonderful to use this. I use it. I just did a study here a couple of nights ago with chat where I was up for 6 hours working with it on where are we going for the society and culture for the next few decades. Fascinating stuff that thing created. I thought it did a bang up job, and it helped support some of my stuff. But at the same time, I've sat back and saying, is anybody really thinking where we're going with this stuff? I'm afraid it's one of those madhouse things that we go over a cliff and then later say, well, gee, we should have known that, So that's my little rant on AI.
We're pretty good at that too, going over the edge and then realizing we're over the edge and being like, we probably should have backed that off a little bit.
Yeah.
We should have done that quarter turn a little bit earlier.
Yeah.
So, all right, let's jump over and talk a little bit about what's happened. Oil is one of the things as far as yesterday goes with that big sell-off and those kind of things we saw. Oil was there. Oil's trading right now under 60. I think it's like 59 or something like that a barrel. When you're looking at oil marketplace, of course, there's a ton of supply out there, and that's been no real big secret. Which, if there's a ton of supply of oil in the marketplace, and there's not as much demand to overcome that supply, that typically means that we're in some kind of an economic slowdown that nobody wants to admit, I guess. That's usually the indicator there, right? So I guess as you're looking at the oil market and how you look and see how it fits into the other cogs in the wheel as far as the economy goes, what are you seeing with oil right now?
Yeah, I'm glad you brought that up because lately I've been focused on just a huge amount of supply, available supply. I mean, you got all the oil you want. But over the past 10 years compared to the history all the way back in the 1800s of crude oil, it has evolved to be a bit of an economic indicator. I mean, they want to make sure they don't charge too much for oil during bad times and hang on to their portion of demand. So they're willing to lower prices down during those bad times. So how much of that is already being built into this pricing? So we do have to consider these soft prices are a sign of not the best economy. And when we look inside the stock market, those 493 stocks of the S&P 500, they're really not doing that well. Haven't done that well for more than a year or so. Okay. So maybe oil's even telling us, a lot of businesses out there, they're doing okay, but there's nothing exciting going on. Well, the problem with being okay for quite a while, pretty soon you have to get worried. Well, yeah, what if something breaks? You don't have enough room there. So the next thing you know, wow, these businesses are now getting hurt, and you drag down the economy. And by the way, there's an economist that says 22 states in this country are already in recession. And he thinks New York and California need to be watched because of some of the biggest in the country. He says they're treading water. He says they go under. He says then the whole country goes into recession. So something to think about that. Now, as far as the current price of oil, it's setting in a range I set up probably 5 years ago that I said when it goes into that range, it's just as cheap as it was like in 1896, 1930s depression when you adjust it for inflation. So it's cheap. Well, it's been bouncing up out of that and right back down in it. Overall has not done nothing for a few years, staying in this little green zone on my chart. I have people have told me they've seen my chart in meetings over in Saudi Arabia and oil. I wish they'd send me a check for it, but speak up a little. I know they've been on my website too. But at any rate, I hope they understand that if they think, this is so cheap, it can't go any lower. The problem with that green box I drew is there really is no bottom to it. It can go to zero on all kinds of other type of economic. All it's simply saying is you're starting to get dirt cheap where something should bottom it out. But it is interesting. OPEC seems to try not to sell it any lower. Although I'm optimistic for a bounce by summer of next year for oil, I'm thinking it's not, unless the supply demand thing changes, I don't think it can go up much at all. It's possible it can't go much lower, but if it hangs on to this kind of supply going into the next recession, which may be here as soon as 2027, ideally, hopefully it's later. But if that happens, we can have $45, $35 oil. That's the normal recession thing that I look at in my lifetime. I'm just saying when I throw in the entire history of oil, really it should hang on to about that $50 or $60 level. And that's where it's been treading water for quite some time. Is it going to tread too long and sink, or is it going to bounce up out of that range? I don't know at the moment.
If you go back and look like the early 90s when the price of oil was in the teens and high 20s, that was a lot different. But like you said, you adjust all that stuff for inflation and where you're at right now. This is kind of what you're talking about, that $35, $40 barrel of oil. That's kind of what you're talking about. So
yeah. But it can get worse is what I want to point out. So I hope people looking at that chart as it goes around the world, they don't think, well, this is the bottom line right here. Not necessarily so.
But Rich Potsdam said this is the low as it can go.
Exactly. That's what I'm afraid of, because things could always get cheaper.
Right. All right. So Federal Reserve has a meeting coming up here in December. There's a lot of back and forth on some of the Fed governors are saying, hey, we think we should lower rates, go ahead and lower rates in December. And there's a lot of them that are pulling back the other way saying, hey, I don't think we should be doing that right now. I think we should take December off and take a look in January and February before we make any more moves. As you're looking at this, Rich, what are your thoughts on interest rates and the Fed right now?
Yeah, practically overnight, they have flipped to probably no interest rate cut. That's part of this decline too. They were saying, well, gosh, we're worried over AI. We're worried over these non-AI companies not doing so good. Inflation isn't really rising to get scared yet, but it's up. And then they saying, well, the Fed Reserve's at least printing money, but of course we need lower interest rates. Well, wait a minute. They're not going to give us lower interest rates. So it just made them even more nervous. Fed Reserve, the minutes came out. I haven't had time to review them. I just looked at people's comments, and they were just saying they were really divided in their last meeting, which way to go with interest rates. And to me, I think we're safe enough in the economy that I wouldn't lower it. But, anybody who really is nervous about this potential recession here right away instead of later, I fully understand they'd like the Fed to do that, to give us some kind of leading time there to get it a chance to work through and help the economy. So I don't really have a bet on the Fed, but I won't be surprised they don't do anything this time, that they'll want to wait after the first year and reevaluate. So that's where the polling is. But again, it's just switched overnight. They were leaning towards still a chance of another rate cut. Now it's like, no, they're probably not going to do it. And the market doesn't like it. My own forecast for interest rates is higher next year, but I may have to wait quite a while yet to see that. And if rates are going up quite a bit, I don't think it's going to be the latter half of next year. And that's probably, if it is going up quite a bit, I think it's obvious it has to be inflation. I suppose it could be some kind of debt blowout. But some of that debt blowouts can actually go the other way, where everything is cheaper and cheaper. We go through a deflation depression. So I think it basically boils down to inflation. And I think the worst inflation is also probably second half of next year. So we're climbing. I think we bottomed for inflation. I'm thinking we ought to be bottoming for interest rates. It may take a time yet. And it's going to be slow, I think, at first. But I think it could give us a problem for the stock market and other things later in 2026. And it also depends how quickly the Fed will jump on fighting inflation. And Powell's probably going to be out in May. And it's going to be a Trump person who's going to be in. And he's already got Trump people in the Treasury. So he's going to tie the Fed Reserve to Treasury a lot more than in the past. And to me, he's not going to worry about higher inflation. It makes his real estate worth more. So, so I think they could be very slow on raising interest rates. That could help this blow up and surge. We could have a 1970 scenario where high inflation in the beginning of the decade, lower in the mid, then higher again late, and the whole decade was up of one of the highest and over many decades. We could see that kind of scenario occurring again. I'm not saying over 10% inflation or anything, but I have targets now at 3.3%, 4%, and 7% later this decade, and maybe just now into 2027. But I need more evidence. We've really started. I need it struck 3%, which is a trigger from my model saying, you better start thinking higher interest rates. But I like to see more like 3.3 to feel more comfortable that something's working that way. And I don't like what I see on the Trump people probably being very late of trying to fight that inflation. So it could get away from us, and then they could raise it, kill it, and things still could be all right. Okay. And it could be transitory. But I'm telling you, at least the middle class to the poor, I don't know if they can stand much more of this rising cost and everything. I mean, groceries are up 33% in a year or something, or maybe it's this decade, I forget now. But, things are going up. And but you look at the monthly inflation that everybody gets, you could just see, it got down to 2.5. Now it's back to 3. Has it really started something? My model says yes. On the economy, as far as factoring that in with interest rates, inflation, the GDP, I'm nervous. I got some indicators that are saying the economy ought to slip into early next year, but it's still rather optimistic and can recover and do a little better later in the decade. But I'm concerned that might be because of inflation, not about the real economy. And even if it is the real economy, if you got rising inflation, people are not going to be happy. Okay, so it just, we're getting an economic boom here, but everything's so expensive. I don't see any leftover money in my pocket. How's it benefiting me? Why should I listen to the nightly news saying the economy is growing? It's not for me. That's a real threat.
That's. I'm glad you brought that up, because I watch the same news all the time. And they're like, "Oh, the economy's on fire." I'm like, "Where?" It's not on fire where I'm at. You know what I mean?
Exactly.
I don't know anybody. All the people I know around the country, I'm asking, like, is the economy on fire where you're at?
Yeah.
And they're like, no, I don't know.
We're just getting by, Casey. That's all we're doing.
Yeah. It's disheartening because you watch that, and it's not just like it's some bipartisan. It's on every news outlet screaming that top of their lungs how hot the economy is, and I'm like, I don't know where or for who the economist got fired for, because it's not for anybody that I know. It's not like that.
It's the guy with the $100 million yacht. Okay.
That's exactly right. That's exactly right. Yep. Exactly
Oh,
right.
by the way, if you don't mind me mentioning, people can
Yeah.
look up on YouTube Ray Madoff, Madoff. I think she's with the Boston College of Law or something like that, but it's tied in with a new economics thing. What an excellent video I watched the other night. My wife and brother found it, and it goes on how the rich don't pay taxes. And how it works is when you get high enough where you're really rich, and you're more rich in the stock market, like Zuckerberg and hundreds of millions or billions or whatever he is now. Okay, sure, if they sold stock, they could then live rich, right?
Sure.
Problem is they're going to pay high taxes, actually. Well, not as high as in the past, but you and I would say that's a lot of tax. The bottom line is what they do is they borrow against their stocks.
They borrow against their stock, yeah, exactly, yeah.
Which is a bit dangerous, but the banks try to help figure it out and work with them because they want the business. So they borrow against their stock and they live off of that. Well, that's all tax-free.
Right.
So they generate a tax-free income. Gosh, I wish you and I could do that.
Yeah,
my wife says, "Can't we figure this out?" And I says, "No, you really got to be seriously rich."
Some juice, man.
Yeah.
A lot of juice.
So a wonderful system for them. But then she goes on and explains how you could just see it's starving everything else, starving the government for money, starving the middle class and poor. It's just trickling through. A very sad state of affairs in the United States today. So keep an eye on that one. Also check out Dr. Steve Keen, Keen, on YouTube. He has a video out there. You might want to look it up. I think the title is Jesus, the Economic, it could be Discovery, Boom. I don't know. I forget what it is. Fascinating, where he goes through history all the way back to Mesopotamia, how we've printed money, how we had jubilees to help the middle class and poor, meaning you don't take away the debt for the rich, you take away the debt for middle class and poor. And he said it's amazing how he can show thousands of years that these governments changed everything. When a new king come in, he did this immediately. And they immediately had a happy people. They had a good economy. It worked. Today, some people feel that we're just too complicated, too big, can't do it. But makes you wonder sometimes. But anyways, he does say even the 10 Commandments, even the deicide, they weren't, and even Christ, they weren't talking about debt as just debt to how we relate to one another. That was part of it. They're actually talking about real debt that just brings us down. And right today, we're 190% private debt to GDP. Okay. That's getting high enough to concern us. And I know the government's at 170, but I'm sorry, I'm still an MMTer. I could care less about that government debt. It's not going to bankrupt us. But that is just my opinion. I respect other people saying it's got to be debt. Well, it really isn't. I'm more worried at that 190%. I'll get really worried when it goes over 200%. There's something inside this private debt that is now concerning, and this may explain a little bit of this selling off as well, because Jamie Dimon, JP Morgan, come out on this. Who was it? Oh, gosh, another big name, and a guy that loves to bet on downside of the entire country crashes. He come out as, there's a thing called private credit. It's a little new to me. What they're trying to do is create funds of that private credit so you and I can buy it. It's normally just for the rich, big business. They want to let everybody in. That normally is a warning something's wrong when they want to let you and I in. Okay, so I want to put that out.
Happened to the housing crisis, wouldn't it?
Yes,
they're letting everybody buy a house.
Absolutely, but it's just my opinion.
Yeah.
I'll leave it there. Yeah. Okay. Anyways, there's private credit. Oh, it's Jeffrey Gundlach, billionaire. They call him the bond king. Jeffrey Gundlach also came out, said this private credit keeps him awake at night. He's concerned something will go wrong, and all of those investors who can get out quickly out of those funds types could pull out so quickly to cause a chain reaction to bring down the whole private credit. But he says the private credit really has some very bad credit. What it is just rich people loaning money to big business. But some of that stuff is businesses are ready to go bankrupt, and they're loaning it to them anyways. So it's non-banking, which probably means less regulated. And there's already some of them have been in trouble. They've already had 3 companies here in the last few weeks go bankrupt, and they had loaned money to them. Okay. So this is scaring some of the big shots on Wall Street here and Banker Street. This might blow up on us. And what it could do is, I'm not convinced it's big enough to do it all by itself, but everything's so vulnerable right now. everything's so crazy that you could just create these chain reactions, to just set off what basically looks like a bomb or something. It just, I get why they're concerned, and I need to learn more and watch that. Sorry, going off on that little tangent, but it is something that's new to me, and it's just called private credit. All right. Yeah. So there's that one.
Okay. Right on. All right. Let's jump over and talk a little bit about when you're looking at what's going on with government reopened up. So all these reports need to come back out and all these different scenarios need to come up. We saw the government rush this November USDA report that came out, which for the life of me can't figure out why they did that, because obviously didn't have any new data to sprinkle against it because nobody was working to collect any new data. CPI reports that need to be done. There's been some reports out. They've got stuff on the websites now, but they're going to bring out the CPI report, I guess, sometime next week or something like that when some things come out. How can they put that report out, I guess, is what I'm getting at with lack of data collection up to this point. And then can you trust the data? How old is the data? Those kind of things. And is it going to do more harm than good, I guess?
Yeah. Generally, it's acceptable statistical analysis where suddenly you don't have the latest best source or it's questionable. And what you do is you look at the history of that data and you start forecasting the data from itself. It's kind of like chart rating on prices. Mm-hmm. And you then fill in those holes of your block of Swiss cheese. So you don't have the real data, but you're just looking at history saying, well, right about now it should be there. So that's what we're going to do. We're going to plug that number in. And they've been doing this across the board. Inflation, jobs, okay, and now it's in the USDA. I think it has to be, because where do they get So, but it is rather acceptable. Most of the time they get by, but every once in a while, this is why we get those once a year revisions where they're way off, because they didn't have that good data and it just didn't work from that accepted statistical approach to help you when you don't have enough data. In other words, they don't want to throw it out because, boy, that can upset the whole economic model and drive the computer nuts, okay? So they fudge it, really, all right? That's what we used to say. Well, they're going to fudge it, right? Just throw a number in there. But it is supposedly an educated number. But this is also bothering Wall Street this week, not of USDA and the grains, but of they're looking at all these reports saying everything is so delayed, it might be too old to worry about anymore or get excited about, but can we even believe it? And I'm afraid this is going to get worse, okay? Yeah. And so I fully understand some people not liking what USDA did, because really they're going with their standard practices of what they've learned for many, many decades, 100 years or however long USDA's been. I can't blame them for going there. They took a shot at coming up with something, but I fully understand why people saying we ought to question that a little bit right now, So hopefully you can find your own private data, okay? Yeah. I'm not convinced you can do anything. I mean, boy, for the sampling USDA did, I don't know how a private sector comes up with their own. It could be, maybe they're out there, but how do you put thousands of people on the ground there to get it done for you, and do it month after month,
My deal with the USDA is, if it was so important to put the November report out, it should have been important to put out the October report too. And that's my
and that's the sad thing of shutting this down. I'm waiting on climate data. They're back to work at the government, but I have no September, October data coming in on temperature and precipitation. I'm wondering, well, how long do I have to wait for that? I think they probably left their equipment on and they will dig it up. But some of this stuff could very well be lost forever. If somebody was out there sampling and they couldn't do it because they weren't getting paid, and who blames them? Now we got a hole in our data. And so, this is where
it would have been better off. It would have been way better off if they would have just on all this stuff just said, hey, we're going to put out a delayed report out in December or whatever, and that we'll kind of a catch up point there. But the idea that so much hinges on what they put out, that it can't. I mean, you might as well just let me do it, right? And I'll just be like, oh, cool, here you go. Here's some numbers for you. This is what I think it's going to be, and because it's one of those things where these kind of things frustrate me a lot, because so much hinges on what's going on. And then, like with the stock market side of what we just talked about earlier here, well, here comes a report out that we don't know for sure if it's how accurate it is, and you're going to throw that gasoline on top of a fire already that, now with algorithms and all the stuff that play into that, you can have these huge wild swings, and it goes from down 400 points one day and we're back up 200 plus the next. And it's just, it gets back to normal, like these huge swings in the market. But so much dollars get changed and so much things happen. If you're a farmer right now and you're waiting to get some of the stuff going and you're trying to sell through the end of the year and you're watching the price of corn move up, well, you took a 12-cent hit because of a report that came out that said exactly the same thing that the September report said. And everyone on that looked at that report says there's nothing the same about this what they put out in November that was in September.
There should have been you would think there'd been heavy duty disclaimers and disclosures there at the bottom of the report. This is bold print.
Just say, hey, this is a guess, right?
Yeah, exactly.
So, you're getting what you pay for right now, right? It's free. Remember that this report's free, so remember that. that's what, and all those government reports, the CPI report when it comes out, that's an inflation report, right? So all those things that come into play there, that really starts to turn some knobs in the marketplace that so many people are now making fundamental decisions on based around their business. Now, there's short-term blips, I get that, but those short-term blips have huge ripple effects that might last 2, 3, 4 weeks, and then you have to dig your way back out of all that stuff, and it just seems unnecessary to for something that's that important to rush it to the market as fast as they do. Now, you can argue that when it's not rushed, it still is what it is, type of stuff.
Exactly. If it's not your numbers, you're still not going to like them.
That's right. So there's a lot of ways to look at that. So I don't know. I guess that's my rant there too. Just I don't know why they get in such a big rush to push the stuff out. If there's they didn't do it in October, so why do they need to do it in November? That's my 2 cents on that. But. All right, last thing, you've been doing some long-term forecasting and stuff, and you're talking about how you went back to 1980 and kind of tracked us through to present day. So you're looking at about 45 years worth of data. As you look at this, Rich, what are you coming up with?
And I think as I come comparing it to other 45-year periods all the way back for the history of this country, as well as maybe take a whole 150 years and just compare it to 45. Back in the 2000s, I did this, and I said, something. Back then I was gung-ho, Reagan, and hey, let's get this capitalism going and let's print that money. And over time, though, I said, things could go wrong with this too. And what I found in the 2000s is really the economy it was losing its pace, not going up as well from 1980s till 2000s. But the printed money was there more than ever. The economy was larger than ever. But you could just see it wasn't trickling through. It wasn't working. And I've kind of downplayed this over the years. I haven't even updated that study. I know it's still working. But in recent days here, Dr. Steve Keen, MMTer, and he came out with that one video. Well, he's got many other videos and discussions. He crunched some numbers. He's got a computer program he's got himself. It just analyzes everything himself. You don't need other people's programs to help you. It's very cool. It's not like a spreadsheet. Behind it is working, but you can just draw on it saying, I want this data connected with that data. What does that mean? Tell me. It's pretty fascinating stuff. But he said from President Reagan, 1980 to now, the potential prosperity in the U.S. declined by 40%. Now, I'm not sure I understand potential prosperity. I got to touch base with him. I've had contact with him in the past year, but it relates to what I learned by the 2000s, I think, that something isn't quite right there. And then he confirmed that what I learned in the 2000s still is going on today. From 1980 to now, GDP around 2.5, 2.75% at the start of Reagan has declined to 1.5. So it tells you things haven't really worked out so well, making all the rich people and this and that. And the way we've been doing things, the whole machine, okay? It's not just the rich people's fault. It's our fault, really. Then he learned from Margaret Thatcher, who was another type of Republican in the UK, in England, that from 1980, England had a 2.5, 2.75% GDP, and it's declined to 1.5, 1.75, similar to the US, probably a little worse than the US. And so what he was just pointing out, that this whole machine has not been working. Well, this dovetails with something I've been working on for all year long here, of consumer sentiment. And in the 1980s to 2000, the consumer sentiment rose just like that, a really nice pace. And you had President Reagan, you had George Bush the first, then you had President Clinton. Clinton was really a Republican when it came to business, globalization, trade. He was a Democrat when it came to society. He launched a different abortion thing, and abortions declined, even though he was giving women the freedom. So he was a Democrat on that side. Republicans immediately eliminated that when he was out of office. And lo and behold, abortions jumped. So, he was on the right track. He was doing some good there. But both Republicans and Democrats didn't like him on the economy side because he was copying Republicans and getting all the credit. Okay, and we had a glorious stock market, right?
Yeah.
And so sentiment went right up, and as soon as he's out of office, consumer sentiment declined from 2000 to today. Now, along the way, on the second term of Obama, consumer took a nice jump. They got optimistic, they got hopeful. I think they decided, hey, we've survived this financial crisis, this crash. Life goes on. The world didn't end. So they were actually happy in that second term of Obama. Then it started coming down a bit, and Trump kind of came back up a bit, and Biden, nothing great. And now it's just gone, boom, right down to the bottom under Trump again, and extends that whole downtrend from 2000. Why? Why do consumers behave that way? Because if you look at what they're doing in the stock market, they buy more stocks than ever. You would think that must mean they think the country's great. Then you look at that consumer sentiment and they say, no, we think this country sucks. Okay, that's the bottom line. All right. I think what happened is they had the hope of President Reagan to Clinton that this system would work and let everybody get as rich as they can, and everybody's going to get a piece of the pie. But in 2000 to date, they woke up saying, you know what? I'm producing more and more at that factory and in the office every day. I get a pay raise, but nothing like what my parents and grandparents did on that increased productivity. I think people are really upset, getting downright mean, nasty about this now. There's going to get things worse rather than better here in the future here. Hopefully, longer term, what this means is we're going to do something in the next 20 years to make that consumer sentiment go higher and recover at least somewhat. But I think to do that, we got to fix where we're at today. And really, if you look at the whole Republican Democrat stuff, none of it's really working. Okay. Right. And this is where I spent that 6 hours with Chat AI the other night, working on what's called neoliberalism that started, they claim, around 1980. And I'm not that knowledgeable all this. I'll point that out right now. But neoliberalism really was about money, the Reaganism, the globalization, getting rich, okay, from 1980 to now. And more people are piling on saying this stuff is dead and gone. It's got to end, okay? And you look at Trump, he's actually tearing it down too. And here he's a Republican. Republicans built that. He's tearing it down in the sense that he's saying it doesn't really work, so we're going to try this. And now, neoclassicism, from what I understand, started long before 1980. But from what I understand, from 1980 now, it's more about civilization, society, culture, taking care of one another, maybe a little more Democrats than Republicans, and a little more Republican on the neoliberalism. But the two are intertwining. They're together. And the Republicans and Democrats have been together, even though they put a heck of a show on, fighting and arguing, and we can't even keep the government running so we can get good data. Let's destroy everything. But behind the scenes, the Democrats are really no different. They wanted that Wall Street machine, the banker street. They wanted people to get rich, and they just spoke up more for the poor and rich, or middle class, than the Republicans. That's all they really did differently. To me, this is a reflection of you and I, Casey, that if they're doing that, that's a reflection. The whole country's that way, that we've been trying our best to be conservative from 1980 now, but we're waking up to the fact, this stuff isn't working. Where am I going for my future? And right today, I don't see a plan from either side of where are we actually going. We're burning the house down, but nobody's even said, well, here's the plans for a brand new house, folks. Right. And this is what's going to be exciting. And I hope the Gen Xers and the millennials and the baby boomer or the Gen Zers get on board with this. Boomers, we're kind of getting too old for, but they're starting to swing the way I think. But we need to come together somehow, pull this show together and say, what are we going to do brand new? And we need to get something rolling here, 2028 and 2032 elections, because if 2034 and later, I don't see any change, I'm going to be a real pessimist on the U.S. for the next 60 years. That's my bottom line.
I think what you're talking about there is a good what's what I'm looking for? A good realization as to what we see happening with the Gen Xers, Gen Z, millennials, those kind of things, and the boomer generation, right? There's this huge divide between that because boomers made their money, right? They've got their money. They're doing their thing. They're off into retirement and they're doing their stuff and they're holding on to their wealth or assets, those kind of things. And you got three generations of folks down here. But I'm a Gen Z or Gen X, and I'm like halfway through my lifetime. But you start looking at like my kids and those kids between my kids. I look at my kids, my son's generation, and I'm kind of wondering what are they going to do? Like, what's that look like, right? That's why you get this boom in the marketplace when you start looking at the trades and those kind of things, because that really is the best place for if you're coming out of high school right now. Think long and hard about going to college, folks. Think long and hard about that, because there's skills you can gain, but if you're just going to college to get just so you have that degree, so you don't.
The degree is useless now. It's still there. They want you to walk through the door with it, but you really need to pick out those specialties. How can you gain?
And that's what I'm saying. Like, if you're going to go to get a college degree, you need to make sure that it's in something that doctor, lawyer, accountant, something like that, some kind of education, whatever it might be. Like, those kind of things are where you're at. And I think what you're talking about here is that we've just work your whole life, and then all of a sudden you take a look at where you're at now, and there's so much out there now that you can't point to and say, hey, I've got this amazing opportunity to go buy my first home. That's not half of these generation of kids probably will never buy a house.
I know, it's scary.
That's really, and that's like the cornerstone asset to building wealth.
That's America. You want a home, right? And the point is, even if you could sign the papers and buy it, that payment is so large, and everything else is so large. How do you get the income? I mean, that's the sad thing. The income needs to be greater, or you have to back these costs down and still boost the income at least some. And nobody's working that stuff. Everybody's complaining, arguing, but it really is sad. I know we had someone to help deliver a car to us we bought here, and he was pretty young, and he looked at our new house we built, and he said, my wife and I, we think we'll never be able to afford a home. And we said, well, we said that when we were youngsters, so come on, get in there and go. Yeah. But right today, if he was right here, I'd say, retract my statement. You ought to be darn right ticked off and be fighting because you're going to get screwed. All right. It's just,
and it's not so much even, obviously real estate's really expensive right now. That plays a big factor into that. I think I watched something the other day. Like, if you go back 5 years ago, what real estate was worth to where it is worth today, and the double-digit growth that you've seen in real estate over that time frame was nothing but COVID, right? It was really what drove that up. But just like everything else got driven up by COVID. Yeah. But it's the debt that these kids have, and that debt to asset ratios and all those things that they have coming into play. Again, that's why I'm saying, I'm not saying college isn't worth your time. I'm not saying that at all. But what I am saying, if you're going to go to college, truly understand what it is that you're going to go do.
Exactly.
And if you're just going to go to get a business degree or something like that, I got to question why. You can, there's a lot of things you can go do to help you get through that without having to go through all that stuff. Yeah. And that's the scary part about this. So you're right. I think as you look through this, and that's the other thing people have been saying, guys I listen to and people that and kind of some of my vision is that there's not a damn thing different between a Republican and a Democrat at the end of the day. Yeah. There's these little slivers that media wants to tell you that there's these huge cavernous gaps between what it is. But at the end of the day, they want the stock market to go up because all of them are being supported by billionaires, right? Yeah. And those every one of them, right? Yeah. So, and big business and everything else. So
it's sad. I think the same way. And the problem is I make my living now at the stock market and I enjoy it so much and I think I'm pretty darn good at it. But I would love to see a stock market just nearly not as profitable because everybody else on the street's getting paid more. Right. Because if you look at these big companies with gigantic buybacks, they're so huge this day. Like a year ago, some company blew $300 million of buying back their stocks, jumped their stock up. Their executives get richer. But like one of the employees said, something that is so huge. I thought to myself, if you've got that kind of profit after I've been working for you, why the heck can't you share some of that $300 million with me? Right. And he's right. I mean, he's absolutely right.
They have the 300 million because of what their employees were doing. Right?
Yeah.
All right.
Crazy times, Casey.
You sound like a couple old guys at the coffee shop right now.
Yes. Yep.
All right, man. Rich, appreciate you being on. Where people can find your podcast one more time?
Go to criticalpointpod.com, and you can also email me at rich@ag-financial.com. But yeah, go to criticalpointpod.com. Get on board. We got some fun, crazy times going here for the rest of this decade.
Funny stuff to pay attention to. All right. Rich, appreciate you being the podcast, man. We'll catch you again next time.
Thank you so much.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast. Got Aaron Fennell back on here to talk about what's happening in the market. Aaron, how you doing?
Pretty good. How are you, sir?
Doing well. Got big Thanksgiving plans? You
got front range, as per typical. Go to my half a roots, go buffs, and doing that for Thursday, Friday, come back Saturday. It's lambing hot and heavy. Can't be gone too long.
Yeah.
Got all hands on deck, baby.
All those
little
kids
tiny
are being
paychecks hitting the ground.
Yeah. Something like that, right?
What about yourself? Well, you're still here and it's Monday, so you're probably not going anywhere.
Nope, just stay at the house. Everyone's going to be home, so I'm not doing anything outside of that, which is, quite frankly, the best Thanksgiving you could ask for.
There you go.
There's plenty of time to do those kind of things on other times.
My whole thing is like you should have Thanksgiving Wednesday, have nobody come over, and then bag it all up, put it all away, and then start Thanksgiving with leftovers.
So I'll tell you,
that's the best part, dude. Little dinner roll sandwiches, little dark meat, little green bean casserole on dinner roll.
So one of the best Friday after Thanksgivings I think I could ever had, and which I was a little at the time I lived in town, so it was back when I lived in Wichita, working at the dealerships there. This was like early in my career. There was someone from every department had to be there because they were open on Friday, right? All right. So my friend of mine that was my counterpart, he had family in Kansas City. It's like, go Kansas City. I'll stay here. Right. And so like I brought back all these, I was just going to redo Thanksgiving dinner at lunchtime. Right.
Right.
And there was a couple guys that were there, and this one guy somehow there was a kind of a freak snowstorm this year, one of the years it went through, and where he lived at was where it got hammered at. So he couldn't get to where he needed to go, but it happened like Wednesday, and by Thursday they'd got him dug out, and anyway, he's back in. And him and his wife for Thanksgiving dinner had a Tony's pizza for Thanksgiving.
Oh, damn.
Because that was like one of those things, like the snowstorm was supposed to be 2 inches, but it turned into like 14 inches, and it had strong winds the whole day. So anyway, I come back in, and he's sitting down. He's like, "Dude, this is great. I didn't have Thanksgiving dinner, so I had, I had everything. But that was one thing, because it was Friday after Thanksgiving. The phone never rang one time. One guy came in looking for something, and it's the most off the wall. I'll never forget this. He's like, I want to buy an articulated dump truck, and I want to put a 2,000 bushel grain cart on the back of it, and I want to be able to have a self-propelled grain cart." And I go, "Well,
and get it on Black Friday special."
Yeah, I'm like, okay. And I go, I don't know that. I'm just thinking out loud here, but I'm pretty sure that would be taller than the spout. The only spout would be on the combine. I don't think you can get that in there. It's like, I already got that figured out. We're going to have a little side dump thing on the side where the grain goes into, and then it puts it into I go, wow, that's a lot of effort. And then just
Boy, howdy.
hook it, like they're manufactured, just put it on the tractor and pull it in. And he's like, I've made a living out of doing stuff outside the box. I go, well, this is really outside the box, so you should make a good living off of this one.
That
for
damn
sure.
dump truck get stuck way before a tractor will.
100%. So I was but that was the one guy that came in, and I was like, okay, all right.
I had a guy call.
Good idea.
Just to see if we were open. And I think he was a little drinky. He's about 4 states away, mind you.
Mm-hmm.
And our thing, the first dealership I worked at, same thing. Only everybody's there Friday. Talk about real high morale.
Mm-hmm.
But
yeah,
you're in Nebraska. They always play the Friday after, right?
Sure.
So
Nebraska,
and that'd always be the Colorado game in my era, so it was extra fun. But I had a guy call.
Nebraska, Oklahoma used to play after Thanksgiving.
Yeah. Yep. Till late 90s, and then it became mid 90s.
That's
Colorado switched. Well, Big 12.
Right. Yep.
When the Big 12 happened,
mm-hmm.
because Nebraska, Oklahoma wasn't every single year anymore. So that's how that happened.
Switched it up.
But I sold an R72 Gleaner to a guy 4 states away and stayed whole. Whew.
Wow.
That was a big day.
That was a good day.
And Colorado won.
That was an even better day because that doesn't seem to happen very often anymore.
Hey, well, this was the 90s.
Okay.
It happened more often, just not against the red team.
Right. Yeah. So,
what's on your mind today, used equipment genius?
That's not me, but I have a couple things I've been thinking about. So you've got this whole onslaught of this new quote unquote high horsepower 4-wheel drive that's come to the marketplace, right? So you got the K715, you got the John Deere 710, 9RX 710, you got 9RX 770 and the 9RX 830. So you have this portfolio of machines now that are bigger than the biggest side machines that were out there.
Belarus 1500. Sure.
Throw that in the mix too. Yeah. And we'll throw in a Big Bud 1000 just for giggles. Okay. So these machines that have hit the market now, a little bit of displacement. So I want to kind of go back and reference. So when the Steiger quad track been out for a long time, right? I mean, what was it?
97.
Yeah, 97. And even before that.
9370.
93.7, there you go. It was even a quad track too, right? So you had that option, put that in there. So that's been around for a long time, right? So you had that whole thing there. What I was thinking about was, how do quad tracks displace 2-track machines, right? And how much of a difference does that make in people's mind? I personally thought when everybody now had a 4-track machine, right? Whether you're talking Delta Track or you're talking Steiger, you're talking Deere, like all those things they had a 4-track option, right? My thought process was, now that you've got this 4-track option across the entire platform that's out there, that the 2-track machine would actually gain some steam because of price. That's kind of what I thought, right? It kind of fell right in the middle between the wheel machine and even guys that didn't want a 2-track machine would look at a 2-track machine because they wanted a track option, right? Totally wrong on that. Now, it couldn't have been further from being accurate on that. It actually made the 2-tracks worse than they were. Well, I don't want to say made it worse. That's not true. It niched that machine into certain crop practices and into certain parts of the country, even more so than it already had.
Real quick, much as you were on your robotic farming, you're about 5 years ahead of the curve, Mr. Seymour. The right now today, you're exactly right. The 2-track now catches guys because it's a little more, I want tracks, I want horsepower. I'm not paying quad track money.
Right.
I want that. So you're right. Now that's taken quad track's been around almost excuse me. The green 4-track has been around 10 years.
Yep.
Okay. You can't compare the red side because they only have the quad track or wheels.
Or the half track. You got the half track scenario.
which is only in row crops.
Right.
So
Yep.
it doesn't fit.
Right.
So having all three offerings,
Touché.
you're right. You saw, basically, as you and I have, we like to brag about even at times, we're diehard 2-track guys. We're just 2-track fans. Other than us, yeah, you lost your new buyer went quad.
Mm-hmm.
The first gen used buyer went quad. It took until you got to that third, fourth guy. And even when you have them side by side, and even once you get, you get enough depreciation, both in age and hours, that they're way more similar than anywhere else in life. Less drivers, less bogeys, Yeah, each track is less, but not when you buy 4.
Right.
That guy that's really where it comes into play now with the oldest of them in the market.
Right. Yep. So now when you're looking at this situation we're in now, you've got this, I would say, between that higher end on the 5 sides, so that 590, 585,
right,
up to
over
640.
5.5.
Yeah, up to 640. You're now kind of knocking on the door of, well, if I have 640 horsepower, and I could do a little more if I had, because really you're jumping at 60 horsepower, right? From that, anywhere between 60 and 80 horsepower, depending on where you're at on the spectrum, up to the next one, right? And you say, for another, I could jump into this other scenario. Obviously it's not going to be right now, that you're going to see this big sway in the marketplace, but over the next couple of years, I would think there'd be some guys that say, hey, if I had a 9RX 640 or a Steiger 620, right, I could see myself going to a Steiger 715 or a 9RX 710 or something like that, and really being able to kind of round out some of the efficiencies that I've been coming up, get speed issues, or I could, if I just, maybe my disc is just bumping up against my horsepower capabilities, I could get the other machine and I could do things a little bit faster. Grain cart stuff, like all those kind of things, like all these different things start to kind of show up that gets me to that peak efficiency with what I already have. I don't have to go out and buy anything different, but I can really get peak efficiency with what I got, that maybe there is going to be some pressure on that, like we talked about, that 685 and up to 640 range there, those 4 or 5 models that are in that mix, that there could be some pressure on that as we start looking down the road here.
Yeah. And maybe this is, you have too much crystal ball and I don't have enough. I think, and I get your point. If we got a 640, why wouldn't we get a 710?
Right.
Okay, then why wouldn't you get a 770? And then why wouldn't you get an 830? Like, where's it stop? With your checkbook, usually. Return.
Here's a caveat in this situation is, if you have a 640, if you don't have to retool at 710, like you would have to retool at a 770 or 780 or 830.
Right.
Right. Because now you're looking like, now I've got 120 more horsepower. That's a whole different animal.
Well, not only that, but it takes a specific trailer to move it.
Sure.
And that kind of stuff.
Right.
Here's the trailer. Here's the tractor. Now, why does it need this trailer? Look again.
Yeah.
You just get into some, like our buddy Drew up there. I could see where, we sell, instead of 10 640s, we sold 5 830s, or,
right.
6, whatever. It makes more sense because you're farming sections.
Right. And your speed.
The further you get to where that thing is built, I think we're on the threshold of it from what's the term I'm thinking here? Moving stuff around. Logistics.
Yeah.
The logistics of it are its own animal too. I mean, that's why I think, I could see the 710 maybe grabbing something, but there's only so many things that 650 horsepower can't pull. Okay.
True. 100%. Right.
All right. As we know, let me put on the dealer hat here a minute. Okay. What do we need 800 horsepower to be out there pulling? I hope it's nothing that big, because unless you buy it with a ring,
right,
that's the only way that's working. As a dealer, I would rather let's take the 640 for instance. Okay, very, very common, tons of them sold. We've got plenty. I would rather sell two 30-foot high speeds than 140. I'd rather sell 5 24-row planters than one DB90.
Well, sure.
There comes a point where too big is too big. The biggest and baddest of things made, okay? Tractors, combines, planters, tillage, has the worst resale because there's nowhere for it to go.
Yeah, because you have a niche. You're
okay,
niche in the marketplace.
So
right?
what are you gonna have? We're gonna have like a backwards Kinsey conversion for these 800 horsepower tractors and turn them into two.
Right.
You know, back in the old, you used to see them old like Farmall WD9s and John Deere 830s tied together to make a 4-wheel drive. Yeah. Now they're going to split them back in half and make two tractors.
No, I think that's why I'm talking about the 710 and 715. The 770 and the 830 size machines are, again, they're big enough. They're just big enough that one, you got to retool, right? So take Drew up there again in Montana, right?
Right.
You hook an 830 to a 100-foot air drill, right? That's a completely different.
See you next week.
Right. That's a completely different animal compared to that, where at a 620 or a 640 was your option now, right? So now you can jump up to that. So now you're looking at it from that specific particular kind of thing. That's a different animal, right? That's a completely different animal and a completely different way of doing. If you are pulling a 36-row planter or something like that with your 620 or your 640, and you jump up to a 710 or a 715, totally changes the way the machine performs, right? Totally changes. Like if you're not, and I say that if you're not living in like where we live at right now, you know, like if you have a 620 and you're pulling you pick the animal that you're pulling, and you have to go up a hill and down a hill. The efficiencies associated with that are totally different than if you're in, you know, Mississippi River flat black dirt. That's a completely different animal. Completely different animal, right? You know, you can maintain the speed you need to maintain there to make the machine do what it's supposed to and perform the way it's supposed to.
Plus, that hill you're going up is beach sand.
Right. Exactly right.
So don't dig too hard.
Right. Yeah. So it changes the way things look. So now I'm not saying that's a one-off scenario. It's not like that everywhere, right? But there's more of that as you look at more of this stuff. Where I'm coming from on this is we have 640 horsepower because, you know, we started out at 105 and now we're at 640, right? So all the way through that time, the explosion of horsepower and all the stuff that's happened has driven people to bigger implements, more horsepower. I'm with you. Logistics right now are going to absolutely table a lot of discussions when it comes to, hey, let's go get 830 horsepower. Hey, let's go get 770 horsepower. Hey, let's go get 715. Hey, let's go get 710. Like all of those conversations, because how many conversations have you and I had? How much wider can you get a 4-wheel drive tractor to go down the road before you need pilot cars to just go from field to field to field, right? And we're there, right? That's why the 4-track systems are so popular, is because you have all the same horsepower, all the same amount of surface surface area to the ground that you
Right.
do on a big dual machine, but you got to pay for that. And I think that's one of the things that we see driving some of this. And that's why I'm looking at some of these machines going like, man, 710 or 715 doesn't seem like it's that far of a grasp when you're at 640 right now.
Yeah.
Or 620.
It's, the other thing, this is a very green dealer way to look at it.
Okay.
We talk a lot about, through things like Op Center and what have you, JD Link before that, optimizing a machine's to its fullest, right?
Right. Yeah.
Why do you keep buying 370s when a 310 is all you need? That kind of discussion. Before a guy breaks that 640 barrier, check that. Okay.
Oh, 100%. 100%.
Please check that.
Yeah.
Because it's not the biggest jump in the world, because you're not changing frames and all that business. 647.10, but it's enough. It's enough jump. Everything's in it. For that matter. If you got a 540, do you need a 540? Check it all. Right. Everything's expensive. Everything's a jump. Mm-hmm. But there comes a time where, and this is for the producer, there comes a time where, yeah, maybe you can use that and nobody should buy anything based on the next guy. Okay. I get that argument all day, every day. But there comes a time where, are you buying a falling rock or a feather?
Right. Yeah. Yep.
And that discussion needs to be had, whether it's a mower, an auger, or the shining star of the farm.
Right.
And that's where, the X combine, the AF combine, and the giant 4-track tractors all come into play. Is this what we're down to?
Mm-hmm.
Yep. And think of the extra cost of the mega machine over the average machine. The trade lost because it's the mega machine. Could we have maybe swung another intermediate machine and put a guy in it and be dollars ahead? There's that argument to be had too, which is its own argument, because the hardest thing to find on the farm is good help. I get it. But there comes a time where that also has to be looked at, just for the sake of, am I buying a feather or am I buying a fallen rock?
Right. Yeah. And I think, and that's kind of my argument. That's a little bit what my argument is, right? Is if you are, how does the 710 and 715 fit into the picture?
Right.
Because all that stuff displaces something somewhere, right? I'm not going to sit here and say that, a DB120, well, that displaced, 6 24-row planters. That's not true, right? But because it's that DB120
the field filling.
That's right. But they had the DB120, the 120-foot planter that's out there and doing what it's doing. That had a specific niche and for a specific area, just like you're talking about there. Like I've got a huge continuous field that I can go from one down and back, down and back, down and back, down and back, and make big passes.
Right.
I'm not having to go plant 120 acres and then go jump to the next 120 acres and jump to the next. I'm going to go out and plant 5,000 continuous acres of corn. Right.
That's not kind of circles.
Stuff. That's right. Exactly. And that makes a huge difference in what that looks like.
Oh yeah.
If you go out and look right now, there's like 6 DB20s listed for sale, used DB20s listed for sale. There's 42 DB90s. There's 142 DB60s listed for sale. So I mean, it shows you that there is a niche for those things, and it's not much, right?
Right.
Right. You're very narrow in that next person what that looks like, right?
Exactly.
I'm sure if you go look at Beauregard 100-foot air seeders. There's a pretty narrow window for that used market too, right? And if you bet, then and as you go from 100 down to, I don't know what their breakouts are, but 100 to 70 to 50 to whatever, that widens that gate, that, you know, that offering opens up, and there's more people that are out there to do those kind of things. Also, too, on the flip side of that, we've seen what the biggest machine does. You know, obviously we're a depressed market, but we start looking at the big machines of whether you're talking an 8800 class or a 9RX or a X9 1100. You saw what those brought. They brought slightly more than what a Class 8 combine, Class 9 combine knew would bring, right? And that's telling you this because, again, narrow, right? You have to have all the other things that go with that combine to make it work, right? Make it work, like, you know. So it's not just a combine that you're buying, but it's the same with that machine, right? That 700 plus horsepower machine it's not just the machine you're buying. You've got to now have, you know, you go pull a 30-foot disc behind a 700 horsepower thing, you're just going to be back there flapping like a you know, like a small trailer going 80 mile an hour down the interstate, right? So I mean, it's just, there's so many things that go into that. What I'm thinking about it is the same way the guy that bought the Class 10 or Class 11 combine. I already have the infrastructure for 2 or 3 Class 8 combines. It makes sense for me to do this now.
Yeah,
I think the same guy that has the same infrastructure for a 640 or a 620 has the infrastructure that will fit a 710 or a 715. And I think that's where my mind's at right now when I look at these machines, is that there could be some pressure on a 640 that is not blow it out of the water pressure, right? But like, you know, maybe you don't sell maybe as many of those new, so that's gonna have an effect on the used on the used pipeline down the way. Do we start seeing more of these machines sell that are 5 and 6 and 7 years old, that have 2 or 3 or 4,000 hours on them, to a different niched place, right? And then the 1-year-old that's got 400 or 500 hours on it, or 700 hours on it, something like that. Like, does that machine now have? Is it a struggle to sell that machine to a secondary user? And I think those would be some of that thing, because is it you go from a secondary to a tertiary or fourth buy or something like that down the way, where you've got this, you know, you've got the price now has you're playing that game again with pricing. Like, you got to price it now to where the guy's going to come and buy that. What's that look like? You know?
Right. It should be worth this, but it never will be, because nobody's here.
There's no one here. This person here is someplace else, you know, and they've moved into a different thing. And I kind of go back and look at this similar, like when that last big turn from the Class 7 combine to the Class 8 combine, and how that adjusted the buying habits of that guy that would typically buy a 1 or 2 year old Class 7 combine is now looking at a 1 or 2 year old Class 8 combine. You had to restructure that, just like it was now. And now you're 2 series away. Now what do you do with the Class 6 guy? Right. That's really, again, that became a very niche machine for a very niche part of the world. Right. And as you push those things through, that's a similar behavior, I think, will develop for those, what now is it's crazy to say this, is a mid-level 4-wheel drive machine as far as horsepower goes. You know what I mean? It's crazy to say that, but it like changed that dynamic.
Casey, we're on the threshold of, if it's under 500, it's not a 4-wheel drive.
Yeah.
I mean, we're almost there.
Right.
And I bet with the next rollout, we will be there.
Yeah.
You know, and it used to be 3+ was 4-wheel drive, then 4.
Yep.
And here we're at 5. So might as well jump to 8.
Yeah. I mean, what was the 9630 horsepower weighs?
535 horsepower.
Right. And that was the biggest of the big at the time. Right. Obviously, there was a few others out there like Big Buds and those kind of things that were bigger, but I mean, mass production units, right? I mean, that 530 horsepower, 540 horsepower was as big as you got, right?
That's the middle now.
Yeah. And now you're looking at that going like, I'll just get a row crop tractor, you know what I mean? Like that's kind of where they're at, you know what I mean? In a lot of ways. So
sure.
always evolution of the marketplace. What's that next step look like, and what does that mean for your business? And I think
we're all going back to sound guards. That's what's
happen. maybe someday. Yeah, after the great, a big EMP attack, and that's what we have to pick from.
Yeah, there you go.
So get you back into that. All right, good place to stop, Aaron. Folks want to get out and see some of your High Plains wholesale stuff. What's the best way to do that?
Well, you can catch High Plains Wholesale on TikTok, and he has a Facebook page with videos. And on the Facebook page, we also post, other things that aren't video for sale. Mm-hmm. And share the same videos on my Twitter and my Facebook, which is by my name, Aaron Fintel. Or you can call me, text me, 308-760-1193.
Right on. You can find me on Facebook, Twitter, Instagram, X, or I guess it's X, not Twitter. I got to break that. I got to break that. X,
don't
TikTok.
They still call it a tweet?
I don't know what they call that.
Just send out an X?
Yeah, I don't know what that would be. You've been X'd. I don't know how that, that seems kind of a very backward way to say that. But anyway, Twitter, X, whatever they want to call it these days, find me there. TikTok, I'm on that as well. LinkedIn, you can find the audio version of this over on AgWeb. If you look under events, you can see the podcast stuff. It's all there. All the Farm Journal podcasts are there, so check it out. You can also go to the YouTube channel, which is the Farm Journal YouTube channel. You can see the audio version of this, as well as if you are a Farm Journal TV subscriber, you got the whole library there and all the Machine Your Pete stuff, and check it out there. So check all that stuff out. And you can binge watch to your heart's desire on that, and check that out. So had a really good show with Rich Possum. So I want to thank him for being on here. We covered a lot of ground on that one. We might have sound like a couple old guys talking in a coffee shop there for a little bit, but we covered some good ground on that. So make sure thank you, Rich, for being on there with that. Aaron, always appreciate you being on the podcast, man. Hope you have a happy Thanksgiving with your friends and family, and we will and Greg as well. Happy Thanksgiving to you as well. So with that, I am Casey Seymour. Let's go do some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.